Hello, everybody. Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool, also known as Mr. Valuation, bringing you another Lessons in Valuation 2-minute drill subscriber request series. Today's subscriber request is on Target. Now, this is a high-level video. It just really helped determine whether or not you think the stock is worthy of further research or not. So let's go into FastGraphs and look at Target, which, by the way, released earnings today. And what you can clearly see by the fast graph are about three things that I'd like you to note right off the bat. The company's semi-cyclical. It does have speed bumps on earnings along the way. It certainly had one during the recession of '08 and so on. Then it had this huge surge in earnings in 21 and 22. Their fiscal year ends in January. Now they recovered in 2024. Earnings are a little suspect for 2025 and 2026, however. They just issued guidance, and they expect to actually have their earnings fall somewhere between $7 and $9. Now, what we've got on here is $8.55, which is basically sort of just a little north of the midpoint of that. Now, if you look at Target's weekly closing stock prices, you can see it tracked earnings, but there are times when the market puts a premium valuation. So when you look at the normal PE, Target has traditionally traded between 15 and 16.5 times earnings when I use this long term. If I drop it to 12, it's still between 15 and 16 times earnings. But my point being is that optimum times to buy Target are clearly, as in any stock, when the price is below the earnings justified valuation line, or the orange line, as it is now. Now, if I look at today's valuation and use my current valuation line and draw a line across how many times Target has traded at this 11.17 blended PE now, we find out that it's actually relatively rare to be able to buy Target at such a low valuation. You can see it was a little bit during the Great Recession, a little bit in 2011, and so on. Again, we had 2017, we could have bought it. It got real close to 2018, but otherwise you would have had to pay a premium. So Target could be an excellent buy now. Now, the stock is down about 5% today after they reported their earnings, and they did have an earnings miss. All right, but now going forward, looking at what Target might look like, they're saying $7 to $9 a share. I drew in our custom calculator on FastGraphs, I drew the earnings at 8. And so if it turned at 8 and we only had this growth of 2.5%, that would imply a fair value PE of about 13.5, and that would give Target an opportunity, let's say through 2027, to earn 17% if the stock traded back at least a 13 PE. If it traded closer to its 16 normal PE, it could be 30% a year. So we got a really good dividend. It's an A-rated stock, 51% debt. And I think you're looking at the stock in an attractive range. I think Target's a fine company. It's going to be around for a long time. It's not unusual for it to go through periods where earnings are a little bad. They had a lot of weakness in sales, and sales aren't expected to be real strong going forward for the next couple of years, as you can see by looking at price to sales. But on that basis, it's extremely cheap. So with all that said, this has been Chuck Carnevale, co-founder of FastGraphs, bringing you just a 2-minute drill. And by the way, a 2-minute drill, for those of you who keep complaining that I go 5 minutes, it's a metaphor used in the NFL when there's only 2 minutes left in the quarter or the game, and they go into their 2-minute drill, which is a fast action drill. Sometimes the 2 minutes can be 30 minutes on the clock. But the point is, these are just short videos, just giving you a high-level look at the company via the FastGraphs tool to help you decide whether you want to invest in the stock or use more time researching the stock or not. Anyway, if you like the video, give me a like, ring the bell, subscribe to our channel, and take a look at subscribing to FastGraphs. It's the value investor's absolute best tool they could possibly have, in my opinion. Thanks for watching.